Stock market today analysis for Friday, January 20th, 2023. In the description of this video, there's a link to ihavesuccess.com. Below that link, and maybe like 2 or 3 inches below that link, you'll see a link to a playlist, Trading Options for Beginners, with beginners in all caps. If you watch that playlist, Trading Options for Beginners, in combination with these 2 downloads, you'll be in a pretty good position to start paper trading, selling cash secured put options on stocks that you don't mind owning. It's actually really powerful to sell cash secured put options on stocks that you wouldn't mind owning, because at contract expiration date, it doesn't matter what happens. The contract expires worthless, you keep the premium, or the contract, you get assigned the shares of stock, you keep the premium, and you buy an income producing asset at a price that you already knew that you were going to get it at. That'll give you the how-tos. And then at 1 minute and 30 seconds, so in 20 seconds, at 1 minute and 30 seconds of this video, a link is going to pop up. It's going to be right here in the corner, and actually it's popping up right now, and that link is to 5 reasons why you should do this. Not how, but why, because when you know why, it makes the how a lot easier. We're going to look at a variety of things. But in my opinion, the easiest way to implement the markets into your life, busy schedule, have kids, busy job, dating 15 people, whatever it is, whatever busyness you have, selling cash secured put options on stocks that you wouldn't mind owning is basically a little more advanced than having a checking account. A little more. 1 or 2 steps above that. But if you can balance a checkbook, you can do this. And if you're not doing it, well, then look at your children and come up with reasons why you don't want to make more money for them. So right now we see the dollar just been moving sideways, right? You can see that it sort of moved sideways here. Now, granted, all these we're looking at a 1 month chart, right? So it's about 30 candles. Each candle is 1 day. We got a 200-day moving average on there, showing us a big trend. And this is just kind of a, it's kind of like we're seeing like a 1 month trend, and it's not like 1 month like January. It's a mixture of January and a little bit of December. And we got some volume. Down here we don't have volume because these just don't have volume. So we see overall that the UUP, which is an index that represents the, maybe it's a trust. It's an index that represents ETF index that represents the dollar. And so the big trend of the dollar over the last 200 days was moving up. Now it's been below that trend, moving down, sideways, kind of drops down, sideways, continuing to go sideways with some low volume. What might happen in the big picture? The value of the US dollar has been going down. I think maybe it started going down in 1913. You probably weren't alive then. I wasn't alive then. In fact, it's possible that no one that's alive right now was alive then. But nonetheless, it might have started going down in 1913. If it wasn't 1913, it was probably definitely 1971. Could be any time in between there. I was born in 1976. Some people that might be watching this weren't even born then. But the big picture is the value of the dollar has been going down. If you look at the value of the dollar over a 30-year, 40-year, 100-year period, you're going to see it has just massively lost value. And it's probably likely it will continue to lose value. It might have some shots up could be a long run, but is 1 year actually a long run out of 100 years? No, not really, right? One out of 100? No, not really. So in the whole context of things, dollar is going down. What time frame? Not sure. Right now, the short-term time frame is going down. TLT representing 20-year treasury bonds, right? TLT kind of sold off a little bit yesterday and really kind of gapped down today. And gold continues to stay in its most recent uptrend above that 200-day moving average, which you can see it was sloping down. So it crossed this 200-day moving average roughly about 30 days ago, and or at least this candle crossed it. We'd have to look at some more, maybe like 3 months to see exactly when was it really this day. But nonetheless, it is on top. It is on the top side of the 200-day moving average, and you can see the 200-day moving average had been sloping down. So the 200-day trend had been going down, but it's sort of bucking the trend right at the moment. Oil still not beating this high, not breaking that high, kind of getting a little bit close, but it seems to be stuck in this low 80s range, and we'll see what's going to happen. The volume on that is pushing up quite well. Bitcoin had a big up candle today, getting close to testing that 200-day moving average. So that'll be interesting to see what happens with that. Hey, just a word to the wise: don't mortgage your house to buy Bitcoin, even if Michael Saylor tells you to. Do you know Michael Saylor personally? I don't. So since I don't know him personally, I'm not taking financial advice from him. I recommend you don't take financial advice from some quasi-celebrity that tells you to do something like mortgage your house. Risk being homeless. Well, yeah, it takes, risk reward. Well, you do you, right? You look at a 3-year chart of Bitcoin and the people that mortgage their house. You think that was a good move? So the VIX came down a little bit today, but from right here, it's up. Right through the last 30 days that we see here, down from there, moved up just a little bit, and for our indices, that basically this is showing us the between these 4 indices, we're pretty much looking at the whole stock market, and this is exciting because we hit this high over here on this almost like a doji candle, huge sell-off, and then in 2 days we're at least in the top, maybe 50% is about right there, 50% through the body of this candle, and we're just breaking that top. But look what happened here. We got the 200-day moving average been sloping down. It had a breakout point and failure, right? Breakout, failed, came back down, hit this area. If we were to look at more to the left, we'd probably see some support and resistance looking to the left of there. But it gives me an idea right here because I see prices got right there. Next day they can't really they move all the way up here, but selling pressure brings it all the way down here, and then next day it's right in there. So it's telling me there's something here, and it's a little bit above this. There's a lot of that price stagnation in there, and but prices come right back down here again and boom, back up, but hitting that 200-day moving average and maybe just closing a little bit above it. So if things are going to keep moving bullishly, then it's gotta break past this point. Over here, and do you remember yesterday I talked about how quickly is it going to fill the gap? Well, okay, in 1 day it filled the gap, right? Then the next question is how quickly is it going to retrace to prices being back up here? Well, okay, maybe it's going to be 2 days, right? Or we're 2 days where it filled the gap at least, right? The very next day, or I guess maybe 1 day if you're talking about yesterday it gapped down. Next day, 1 day to fill the gap. And but 2 days have passed and we're not back up here. Okay, so we'll see what happens on Monday. See what happens on Tuesday. See how next week plays out. Over here on the Dow Jones, it filled the gap, right? Prices over here. But if around here's the 50% mark, we're in like the bottom 10%, maybe 15% of this candle. So this one is not showing as much bullishness is this. NASDAQ showing more bullishness than either one of these. Filled the gap the next day. Prices almost back to the top of that, top of where this candle sold off. And over here with the Russell 2000, looking like a cross between this one and this one, right? Because it's in the lower part of the 50% of this. Which at least yesterday prices came down here, test that 200-day moving average. So being on top of the 200-day moving average is a good sign for the bulls. Right, we're not making it to test that yet. We're on top of the 200-day moving average here. Good for the bulls. This one. So we got you know, out of 4 indices, we got 2. I mean, do you want to count that on top of the 200-day moving average? You can if you want. I'm not really counting it. I mean, it closed barely over it, but most of the price action was below it. So this is definitely, right? There's no doubt about that. On top of the 200-day moving average. No doubt about that one. On top of the 200-day moving average. We'll balance this out being 50 under, debatably, right? Under, and 50 over. So hey, we got a lot of volatility in the markets. How did this shake out with these 12 different sectors? Well, we see you got this big bull candle over here on the technology stocks. Real decent amount of volume there. Healthcare not looking as bullish, right? We're 2 days later. So the second day here, we're almost to the top. Second day later here, where's that 50%? Like, we're like, maybe, it's too debatable. It's out of this body of this candle, it looks like we're possibly maybe still under in the bottom 50% range. A little volume not hitting a high amount of volume, but this is a good sign here. Prices traded all the way down here. I don't know if that's necessarily a good sign, but this would be a better sign, right? When you price open here and pushed all the way up here. For some reason, selling pressure really did press all this down, and so opened here, selling pressure pressed all the way down here, tested this low, buying pressure brought it up. So maybe that's good, but definitely not as much strength per the last 3 candles in the healthcare sector as we see in technology sector. Now this looks like a stronger candle, right? Because it opened up here, didn't sell off as much, and prices pushed way more up to the top. But we're still in this bottom 50% of the candle, this drop of sell-off candle. But we passed that this gap here, broke that gap, and I think the financials have been reporting over here in industrials. Look at this, didn't fill that gap, and so not even close to regaining this lost pricing action here. We basically just trying to regain this candle right here, and coming up a little bit short, but close to it. And it took a lot of volume to make that happen. Over here with basic materials, right, showing some strength, covered that gap. That one, it's like right around that 50%. Look at that. We're probably seems to be hitting some resistance right in there, kind of on the weak volume side. All right, so the communications looks like we finally got ourselves something looking actually bullish versus just hopefully bullish. What am I doing over here? Here we go. That's what I want. Okay, so prices, see that little itty bitty wick up there. So prices did get a little bit higher, but out of the month, pushed to a new high today. Let's see if we have some follow-up volume coming in. Is it going to keep pressing that higher? Energy's basically regained that drop, right? So 2 days later, back there. And over here in consumer discretionary, we filled that gap, but we're still in the bottom 50% of that. Probably need some more volume. Over here with consumer staples, haven't filled the gap yet. And utilities, we'll look at that. Really tested down here at the 68. Volume really picking up the last couple days. Those 2 days of selling volume. Look at how volume was dropping off and then just spiked up. Now we got a green volume bar here. So there's just more buying than selling. And it at least pressed prices up here. So it didn't close in the super low. But showing some weakness, right? Because we're not even recovering prices here. We're not even in over there. And on this real estate, sold off. Similar. We got a lot of these candles with a long wick to the bottom. That might be a sign that we're going to see a little more action to the upside. It might not be some strong action like this, but maybe some selling could possibly be done. Maybe it'll start moving back up. But if it moves back up and then drops down again, then it's just a lot more evidence that we're going sideways, right? When things move up and then go down, move up and then go down, up, down, up, down, up, down. That a lot of times equals sideways. How do our interest rates end up? Still got this yield curve inverted. I'm not expecting anything different, to be honest with you. I wasn't expecting all of a sudden there was going to be some big difference. But look at this. People getting paid. Oh man, if you want to, like, you lend the government money for 1 month, you think even though the dollar is dropping down and the U.S. government is theoretically bankrupt, if it wasn't a government, it would have filed bankruptcy already. It's probably going to be okay. You can get a little less than 5% on a 1 month loan, but you loan out for 30 years. Look at that, only 357. You like 357? So yeah, that's what seems to be the deal. What else would be? Let's do it like this. We'll go like this, just for fun, because I heard the Goldman Sachs tanked today. Ooh, sure enough. How about what's another bank that might have been around? Is it I forgot what's bank of? Is it Bank of America? Oh boy, I don't really pay attention to too much of banks. Goldman Sachs. How about Wells Fargo? Wells Fargo, who tends to do very scandalous things to their customers. So Wells Fargo, kind of this doji, looking like a big sell-off here. And what was XLF? This is a financial trust, so there's a lot of different banks inside of there. This is what you can do, what we can do right now. You can go check out for a big price of 0. You can go to Yahoo Finance. You can put in any type of ETF, and then so now we're looking at XLF. You can go under holdings. Oh boy, come on, that is not what I wanted to see. This is what I want to see. Okay, here's a top 10 holdings of XLF. right? And is Goldman Sachs in there? Sure enough, it is. Oh, Morgan Stanley and Citigroup. Let's see what happened with those two. What was Morgan Stanley? Okay, even though it has this dojiest looking action, it popped up. I should have remembered. It's not Citigroup, it's Citibank. Okay, you know, obviously look at when going down, but that candle for today. Who else can we look at? Oh, BAC. That's what I messed up on. BAC. All right, sold off, but not like this. This one really took some lumps today. What else do we have in here? JP Morgan Chase. Yeah, let's check out JP Morgan Chase. Another bank that is infamous. You might not see this on the news all the time, but if you look a couple pages back, infamous for paying fines for spoofing in the metals markets. That's right, yours truly, Jamie Dimon from JP Morgan Chase, pays out a lot of fines for doing illegal activity. That's what these banks do. And so oh, look at that, sold off. Why am I bringing that up? Just bringing it up so you realize when these people come on TV and they start talking, come on, you got to stop listening. If you take Jamie Dimon, if you think Jamie Dimon cares about you, if you think the people from Wells Fargo care about you, Wells Fargo scandal. Let's see what pulls up. Oh, look at this. Over fake account scandal. Wells Fargo ordered to pay, $3.7 billion for illegal activity. All right, there you go. You know, your money's safe with Wells Fargo. How about JP Morgan? Oh, look at that. Wow. Look at how a lot of people, look at that. They're just looking for that. Well, illegal trading, huh? Look at that. Oh, admits to, what is that? I don't know what exactly here. You can read through it if you want. Oh, paying just a half of, what is that? Oh, 436 million in fines over market manipulation. As they go on TV and tell you, you know, what you should do, right? So I hope you're getting it. I hope you're getting it. There's nobody that cares about your money. These people are going to go on TV and they're going to lie to you. That's what they're doing. If you haven't figured that out yet, splash some cold water on your face, right? I get it. It's like we don't want our rulers to be lying to us. I don't want it, but heck, you know, that's why I think that it's really important that you learn how to take care of your own money. It's because these dorks, they're just going to lie to you and try to steal your money. It's not that funny. It's not that funny, but I don't know what else. I don't know what else to do but laugh about it. All right, let's check out BRKB. Let's get that out of here. Negative thinking. Oh, that's negative thinking. I don't want to think about that. I mean, gosh, if you're in a relationship and your spouse keeps cheating on you, are you going to pretend that it doesn't happen because you don't want to keep thinking about it? Maybe you would. I'm getting myself a divorce. That's what your good buddy Brent is doing. You do you. Right? You just want to pretend it's not happening. You know, denial. As I said, the first sign of addiction is denial. If you're denying that these banksters are cheating you left and right, then you know, maybe you're denying reality. BRKB. BRKB. Berkshire Hathaway common stock. What happened to you today? Warren Buffett. Oracle of Omaha. Yeah, looks like it's not pulling up. Taking too long. There we go. Yeah, sold off today. So we got some mixed reviews over here in the banks doing their earnings. Earnings coming through here. You know, there's I showed you before how you can use Yahoo Finance. Actually, I used to make videos on this quite a bit, but so here's another little strategy you can do. end this video on a positive note, right? Sorry to burst your bubble, and sorry to let you know the banks that run the U.S. are basically fraudulent, and they do a bunch of illegal stuff, and they're more than happy to go on TV and lie to your face. Sorry to burst the bubble, but it's better for you to make money knowing reality than living in, fantasy world. Let's check out BlackRock though real quick. BLK. BlackRock, Doji-ish action. So, the banks, they're not looking super strong. Charles Schwab. Hey, I got TD Ameritrade getting bought out by Charles Schwab. SCHW. Oh, sold off. Okay, so we're not seeing the greatest strength in the banks. And what was XLF doing? XLF. All right, sold off. Okay, so here's something that you can do. Let's say you don't want to worry about companies. You want to focus more on trading. You're like, I definitely trade, but I trade and invest. I know how to keep them separate though, right? Maybe you don't want to invest. Maybe you don't want to learn about company fundamentals and things like that. So one thing that you could do is, let's say you want to trade. You want to trade an ETF. We're going to use XLF for an example, since we already got it pulled up. So XLF is an ETF, and 54% of XLF is right here. So obviously, whatever these are doing, right, affects XLF. Now you could even you could dial it in more. All right. So okay. So where's the top holdings? Okay. So we see Berkshire, right? That's at 12%. JP Morgan Chase is a little under 12%. Bank of America, about 7.5. Then it drops down quite a bit. So one thing that you could do now, I haven't done this in a long time, and I've never done it with like XLF. So maybe you want to dial it in a little more. And what I mean by dial it in a little more is, one thing that you could test is just looking at these three, right? So for example, if Berkshire Hathaway, let's say, is going up, and JP Morgan Chase is going up, and Bank of America is going up, there's a very, very high chance that XLF is going to go up, because this makes up the bulk of XLF. Now, maybe you want to add in something else. Maybe you want to watch all of these, right? Top 10, right? Because of course, it just gets a little more like maintenance. Maybe you got these three going up, but maybe you got the 7 other ones going sideways, right? Let's just do it like this to save some time. 7 going sideways, and then you can add up what's the total percentage of this, right? So let's say even though these are the top, if ultimately this is outweighing these and it's going sideways, so you've got more pressure to the sideways. You can do stuff like that. You figure out what's going to work for you in your life with your schedule and that type of thing. But this is, I don't know if I want to say 100%. I was about to say it's 100% effective. And I think it's pretty darn close to 100% effective. How could it not be? Because these stocks make up the bulk of XLF. XLF does whatever these do in combination. So you watch what these do, and you got an idea of what XLF is doing. Going to do something like that. So play with that. You can do it for anyone you want. You want to do it with XLI. All right, holdings. Same thing. Another thing you could do, let's say you don't want to trade. Let's say you don't want to trade as much, right? This would be really good for a trading strategy. Get an idea of what the sector does, then you're dialed into what's the highest holding. You're constantly, you don't got to check it every 5 minutes, but you're paying attention in case something gets switched out. You don't want to be one day, you find out that that Honeywell International doesn't make up 4.9 anymore. It's down here at 2, and Caterpillar, got bumped up here, and you weren't paying attention to Caterpillar, but now it has the most weight. So you want to pay some attention to it and have an idea of what the different holdings in the sector are, right? Now, something else you could do that could be a little bit more for like position trading, longer term trading. I don't know, 3-6 months, something like that. Not day trading, not just a couple days of trading, or if you want to do it a couple days of trading, whatever. I don't care. You put it in whatever category you want. But here's what else you can do. So let's say you're watching your sectors like this. We'll go back to the sectors. Where are they at? Here they are. Right, and let's say what do you notice seems to be going up? All here. All right, you're like, energy sector, for whatever reason, you don't want to deal with that. You like this. That looks cleaner. Pulled back, boom. It looks powerful to you, right? This doesn't look like as strong, even though you got this downward sloping 200-day moving average is coming to. Nonetheless, let's check out XLC. So you could say, hey, that sector is going up. So you could look at communication services sector going up. Oh, we got to get over here to holdings. Come on. There we go. You can look for some stocks inside of here, because overall XLC is going up because these stocks are going up. Now, if just Facebook, aka Meta, having their identity crisis, if that has the most weight to it and that's going up really, really strong, then you don't really need, like, you could have a lot of these going down, but when you got something weighted 23%, right? 23, it's almost 24%. Right here, let's just keep the math easy. Let's just say this is 24 and we'll say this is 10. That's what, 34%, and you got Google. That's like A class. It's the same company, right? But two different types of shares. Let's say, so that's round, okay. You want to be, I got it. You don't want me doing mental math. 2, you want it to be accurate, and you know that I'm not the greatest mental mathematician. So if you got Meta, formerly known as Facebook, at that percentage, and then you got Google over here pushing that 49, 1149, and then 1116 down here for Google again. Looking basically 50%. You got 3. So if you had not necessarily all of these, but maybe all of these, depends how much. But let's say you could have these 3 moving a certain direction with some power, and you could have the other 7 kind of like not really moving the opposite direction, but let's say these are moving up and these are moving kind of sideways to down, but not super powerfully. This could give you a false impression that the whole sector is moving up when it's really just these 3. So it's something that you can kind of dig into, pay attention to, and realize that there's these different things. And what you can also do is you could start checking out some of these. You could be like, hey, this sector is moving up. Let me find something in my price range that's here that is looking like a pretty good setup for my particular style of trading or investing, whatever the case may be. So you got to kind of play with it. You got to figure out what's going to work for you. That's a big thing about this stuff, is you got to figure out what's going to work for you. Because I'll tell you what, let's say you live in Eastern Standard Time and you're day trading, and you call me up and you're like, Brent, you got to start day trading. You got to start day trading. I'm going to tell you, hey, buddy, at what point are you going to stop barking up the wrong tree? I told you, I'm not waking up earlier than 6 to 6:30 a.m. That's the way it is. And if you start talking, well, you don't need that much sleep, blah, 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 blah. Shut up. Right? So you got to figure out what's going to work for you. I got to figure out what's going to work for me. But what we do know is we have these resources. You can check out these different ETFs. You can look to see what's inside of them, right? You could trade or invest in these stocks individually, or you could short if you see a right, you got a sector that seems to be really moving down, like retail and real estate's doing a bit better. What's been dropping? Okay, utilities. You could potentially XLU. Maybe you want to find shorting opportunities. You find a sector that's moving down, and then you could either short the whole sector by again looking at these individual stocks, whether you want to look at 3, whether you want to look at 5, whether you want to look at 10, whatever you want to do, however is going to work out well for you. Or you could look at the individual stocks in there. Just get creative with it, right? Get creative with it. And the most important thing is, here's the most important things. Number 1, don't trust these people coming on TV. Learn to manage your money for yourself. I get it. There's a little bit of like, oh, what do I don't know. Don't think these people are smarter than you. Now they might be, if they were to take an IQ test, there's definitely going to be people on TV that are smarter than me on an IQ test. But that doesn't mean that they're trustworthy. That doesn't mean that they care about Brent's money more than Brent. That doesn't mean that they know Brent's sleeping pattern better than Brent. That doesn't mean that they know Brent's work schedule better than Brent, right? Only you know your life the best, and only you care about your money the most. So number 1, all these opinions that you hear, and I don't care if it's from political candidates talking about whatever, markets, whatever, like, treat everybody as suspect, right? You could say trust but verify. Or you could say don't trust and verify. However you want to say it. Verify. Don't just blindly trust these people, including me. Don't just blindly trust me. Right? Get in the habit of, when it comes to money, of realizing that there's a lot of scams going on. You heard of FTX, right? That guy got in front of everybody and lied to people. You heard of Bernie Madoff, right? That guy got in front of people and lied to people. Now, both Bernie Madoff and FTX were like rubbing elbows with Securities and Exchange Commission, the regulators, right? You know that, right? How about MF Global? You know about that scandal, right? When Joe Biden was vice president, he was bragging, I picked up the phone and called John Corzine. John Corzine, the dude that seems like he just stole everybody's money. And he got in front of Congress and he's just like, I was just a CEO. I'm just the most responsible person, but I just don't know where the money went. But if you wire like $5,000 to $10,000, everything gets traced. But these millions of dollars, they just don't know where it went. No one can find it. Come on, right? You cannot be falling victim for believing that these people on TV, that they all get together and drink champagne together and laugh at us. Like, these people do not have your best interest in mind. So that's number 1. Number 2, you got to dig into the resources that you have. And you got to try to do it in correlation with what your lifestyle is like. I'm single. I don't have any kids. I can put a lot more time into it than somebody that's married and has 5 kids, and the marriage spouse and the kids need a lot of attention. Right? So you got to figure out what's going to work for you. But what's going to be the same for us? What's going to be the same is Yahoo Finance is free. What's going to be the same is I can put XLK in here. I can go under holdings. I can look to see how much what stocks make up this particular ETF. I can look to see what percentage. And if I'm not good with mental math, I can whip out a calculator. Right? I can have a paper trading account. There's a lot of stuff that I can do. So Robert Kiyosaki talks about 3 sides to a coin. There's the head. There's the tail. Hope you like that tail. And then there's this edge. And Robert says that our job is to stand on the edge and look at both sides, right? So when I say, hey, look at all these scandals going on, there's this bad stuff going on, you can't trust these people, blah, blah, blah. All right, so there is some truth in that, but that's one side of the coin. Yeah, so you don't want to get polarized. Next thing you know, you're all depressed. Oh, I can't do anything. They're all against me. Don't do that. But at the other side, just be aware, okay, it's reality. The system is rigged, and more than likely, if you're watching this video to try to learn something, then you and we're not in that club, right? So now, we realize the stuff's going on, right? But over here, the other side of the coin, right? The other side of the coin, the happy side. Look what we got for free right here, right? You can paper trade. If you're not good with math like me, there's a calculator. Right? You can look up a variety of stuff. You got this for free, where if you wanted to, you can set up a, oops, sorry about that. Here, I'll show you, where is my saved screener? I'll show you a basic screen that I use a lot of times. Well, here's some of the companies that are being pulled up under the screener. Well, let's take a look at it. So it's showing me all different types of capitalizations, market caps, small cap to mega cap. Well, I got volume greater than $500,000. I got a forward dividend yield of 3% or more. I've got enterprise value over EBITDA, which is basically kind of letting you know how much money it makes, and it's kind of how much money, you could say how much money it makes, but when it's enterprise value over EBITDA 10, less than 10, it's where it might be at a good place to buy into a company. You might be getting a good deal. I got PEG, the price to earnings to growth, at over 1%. This is not my ideal thing. Like, I would like to have this be between, to be over 0 but less than 1, or something like that, over 0 but less than 2. And then I got debt to equity is less than 0.4. So not these debt-ridden companies. Now, out of I don't know how many companies there are, thousands and thousands of companies. This screened down to a handful of companies that I can look into a little more. This is one that I like to use as an example all the time, because guess what? Taxes, they're not going away. I wish they would, but they're not. They're not going away, because all those corrupt politicians, you got to pay them. That's the way the system works. This is extortion. Right? It's not for the roads, it's for them to live lavishly and accept bribes. So taxes, they're going to be around. So H&R Block's probably still going to be around. So what can we do from there? We can look at what's H&R Block giving us. Okay, it gives you $1.16 per year per share in dividend, and currently buying at this price, it's 3.11%. We don't see what this particular fair value is, but for free, we do see that. However, we could read through here. We can see that how Yahoo Finance calculates it, that they are calculating this is undervalued. We see the trading range has been as low as 20 in the last 52 weeks. It's been as low as $21.08 and a little less than $50. Average volume is a little over 1.5 million. So it's a pretty liquid stock. What else do we see right here? Okay, earnings coming up if you want to do some sort of earning play. Beta, this moves, if the market, this moves like, this is less volatile than like the S&P 500. PE ratio, okay, generally speaking, right, if you got a PE ratio under 10, then that might be a good deal. But you want to look at the sector it's in. What sector is this in? So we can scroll down here to find out what sector. This is in consumer cyclical. So because this is close to 10, but a little over, maybe you find out what's the average of consumer cyclical. Maybe you find out the average is 15. So if the average is 15, then this would be possibly give you an indication that it might be a good deal. Now let's say the average of consumer cyclical is 7. That might be expensive for them, right? Earnings per share, basically getting about $3.05 of earnings per share with a trailing 12 months. That's what that stands for, TTM. And shows you ex dividend, like you gotta own the stock by this time to get paid that dividend. And 1 year target estimate at least per Yahoo Finance at $38, right? So you want to hold on to this for a year to possibly make $1? You know, probably not. Maybe you could find a stock that's down here at, let's say, 15 and a 1 year target estimate of like whatever, 35. That might be a better deal if you're going for capital gains. What if you're not going for capital gains, right? We got to think about your particular situation. What if you're buying this for the dividend? All right, different story. Maybe you're not as concerned about it. Like for example, if you're buying a house to live in, you plan on living in this house for the next let's say you just had twin babies, a boy and a girl, and you plan on living in this house until they're 18. You just bought it, right? The babies are 1 day old. 1 day. You just bought the house today. At the same day you had twins. You were able to have your wife in labor, and you got all the title paperwork and all that stuff done all in 1 day because you're a go-getter. So here's my point. Do you care if, there's your tree, do you care if after let's say in 30 days or maybe 2 years, do you care if the market value, the price that you could sell your house, went down? Would you care? Probably not, because if you plan on owning this home for 20 years, then in the first 2 years you don't care. You got 18 years to go, right? So sometimes you got to put that in perspective, right? What's the goal? Why are you buying this paper asset? So what else could you look at, right? We're talking about there's the head, the tail, and the edge. We're standing on the edge. We talked about this bad stuff. What's this other free stuff that you can get? Look at this. It shows you their earnings. It shows you the revenue, so it shows you how much money is coming in. Shows you how much their earnings is after they paid out things, right? If you wanna follow these unknown people recommending things, which I personally don't, but if you wanna trust the suspect opinion of other people, it's right there for you for free. You can read about H&R Block. You can see this right here is the sector in this lighter color. The darker sector or darker color shows you their earnings is really good compared to the sector. Dividends is a little bit out there. Now let me show you something else. Take a peek under here at statistics, right? Look at this. Enterprise value to EBITDA under 10, right? Possibly could be good. But why was it negative in 2022? Look at this. 2020 at least this time. Maybe this is quarterly. Over here 2022 it was at 20, right? So did their earnings go up? Did the price drop? What's going on? What's this? 2022 was all the way down to 7. What's going on? Why is it negative? Seems to be interacting. So maybe there's something there. Maybe it's because it's a cyclical business, right? Taxes. Maybe you want to look into stuff like that. PEG ratio. Look at that. It's a pretty good PEG ratio. Pretty good PEG ratio. Price to earnings. There's a lot. Anything on here. If you don't know what it means, look it up. Find out. See what you want to pay attention to. Held by insiders. Look at that. Not too many insiders holding this. But look at this. Wow. Lots of institutions hold it. And what else would be good to know? Payout ratio. Okay, so about a little over 36% of their earnings goes to paying the dividend. That's not too bad. That seems doable. And then you can take a peek at this. Let's look at cash flow, free cash flow in another spot. And then you can go over to financials. There's obviously a lot more you can do. You can look at, go to their balance sheet. You can look at this total assets, cash, cash equivalents, a little less than $1 million. What's their total debt? Total debt. Ooh, look at that, almost $2 million. Huh? So if they had to pay off all this at one time, right? You use all your cash on hand to pay off your debt? Nope, can't do it. Does that mean you don't want to? You don't want to invest? You don't want to trade? You don't want to do whatever? No, not necessarily. But here's my point. This is all free. You could be looking at all this stuff for free. And if you don't know what it means, you could be learning. Free cash flow. Look at this. Once they pay all their monthly bills, they got money left over. That's pretty nice, right? They're not in the negative. Can you imagine if you pay all your monthly bills and you're in the negative? Like, how long can you keep that going for? So when you have money left over, if you make $1,000 a month and your bills are only $100, you got a surplus $900 a month. You can keep that going for a long time, can't you? So, three sides of the coin. Yeah, there's this scandalous stuff going on. And yeah, there's this really great stuff going on. Scandalous stuff has been going on since before you and I were born. Goes back to ancient times. It's always going to be going on, right? The only difference is now they're using the media even more to cover up their dirty deeds. And so you can either fall onto the side of the coin and just totally get all upset and irate over all this political corruption and whatever you want, societal corruption, or you can fall on the side of the coin and pretend it doesn't exist, or you can be a good investor. You can stand on the edge. Stand on the edge of the coin happily. Big smile. Happily. You see the tail. You don't care because you're also seeing the head. You're seeing that even though there's all this bad stuff going on, you can make some money in the market. I hope you guys have a fantastic weekend. This Sunday I'll be posting the weekly chart review. And other than that, I don't know what I'll be doing. You have a great day. Bye-bye.